everyone, this is Alex from Gains, and today I am with Brian Kerr from Kava. How are you doing, Brian?
I'm doing good. Thanks for having me.
Awesome. Can you start by telling us a bit about yourself, what you did before crypto, how you got into crypto, and if you did anything else before Kava in crypto?
That's a good question. So before crypto, I spent a lot of time in the games and esports industry. I started my career as if you ever watch Mad Men, I was like the Peter Campbell of that show, the guy who ran around and got all the big corporate clients. So I would work with our partners at the agency that were like NVIDIA and big AAA game publishers like Square Enix, which made Final Fantasy. And then we would produce large scale events and campaigns for them on their most important product launches. But that was like my first foray. And then from there, I helped found like Fnatic and Fnatic Gear, which was on the esports side of things. So a little less on the corporate. This is more in the early days of esports. And I got to start that company really as like a really, really small team. It was a few people in London. And it grew to in the like a 3-year time span to 100 plus people. So it was really like an exciting ride to watch all the advertisement dollars flow in to esports as it came from like the cool thing you did with your mates from high school to an actual whole industry. I shouldn't say business, but a whole industry, multi-billion-dollar industry that came with a lot of family office money, huge corporate investments, venture capital, all sparked because Twitch came about, and it was a streaming platform that now advertisers could spend and reach these really hard to reach eyeballs of millennial males that spent most of their time not watching television or listening to sort of radio like generations have passed, and they spent all their time on the internet. So it was a really big boon, and I got to ride a lot of that, and it was really exciting.
Yeah, I
But
was
from there,
I was really
go
excited about your Fnatic part because I myself spent a lot of time in esports. I played League of Legends quite a lot for about 6 years, and I
okay,
tried
so you know
to.
Fnatic for sure.
Yeah. I played against some of the players in solo queue too. So Yellow Star, so it was good
Mm.
times. So
You were pretty high ranked.
yeah, I was I, I picked rank 300 in the EU West server. So I
Oh,
tried to
nice,
go pro,
nice.
but I wasn't good enough for Fnatic yet. But yeah,
It's tough.
yeah, it
We
is.
got really lucky. I say lucky, but we just had really good players, and we became the world's first League of Legends champion, and then League of Legends took off from there. And I was actually just watching. Someone posted a video of the World Championships, like the opening ceremony in 2019, and it is like a full-on Super Bowl halftime show. It's like millions and millions of dollars gets poured into these productions now. I'm so impressed, and unfortunately, I have had to take a back seat over the past 2 years or 3 years as I've gotten really deep into crypto. But it's nice to see that kind of esports is going full steam ahead.
Yeah. And so, how did you get into crypto?
So you might know this team as well. So my good friend Alex, who was the CEO and founder of Navi, Natus Vincere, him and a colleague made a blockchain project called DMarket, which was a decentralized marketplace for video game items, particularly CS:GO skins. And they launched an ICO in I want to say it was like the end of 2017, but they asked me to be an advisor given my gaming background. And at that point, even though there was a lot of venture capital money flowing into esports, the companies were still in like sort of the low millions of dollars to $10 million revenue ranges. If you weren't a game publisher, that was like if you were an esports team, you're making some money, but your valuation was much larger. But you still had to sacrifice equity to raise capital just to keep up. It was like keep up with the Joneses. If you didn't raise enough money, then other teams would poach your players, they would poach your sponsors. Like you would. It was like an arms race between the different teams. So at that, when I saw what DMarket was able to do, raising I think it was around $20 million in a very short time after just coming up with the idea, I realized that something very different was happening in the crypto space than anything I had seen in traditional business, where you have to have some amount of revenue before you can raise a Series A, or you have to have at least product market fit before you can raise a Series A, and then you grow it from there into a Series B. This is just such a different model than I had ever seen before, that I knew it was something I needed to like dive very deep into. And shortly after, I stepped down as a CEO at Fnatic Gear, and um, I just went full time into blockchain. And I didn't start a company right away, but instead I just spent all my days and nights researching, what is going on in this crypto space, because something massive is happening.
Right. And so, how did you start Kava? I'm assuming many people will know about the Binance IEO, but can you tell us maybe about the early days, how the idea came up, the team, how you started things?
Yeah, for better or worse, we created Kava not with a blockchain in mind. It was instead, we were like a software development and research shop. We got to work with Ripple and Maker DAO and a number of the leading projects through 2017 and 2018, particularly on layer 2 interoperability and payment channel technology. And we built some of I think it's the world's first non-custodial like wallet that can swap between Lightning Network, and we built payment channels for Ethereum and DAI and XRP. And within the wallet, you could swap between those currencies using decentralized liquidity pools. And we were really bullish on interoperable payments as a company, and we thought that that was where the industry was headed. It's like crypto moves value very nicely, and it's way more efficient than traditional markets. So we were quite bullish on that. However, by the time kind of the bear market started hitting, it was quite obvious to us after we looked at market data that this field that we were diving deep into of crypto payments was not growing as fast as we were hoping it would. And we became, I guess, bearish on the outlook, still positive in the long term, but we knew that we needed to look for some other different business model. Otherwise, we'd be completely dependent on getting grants or subsidies from Ripple or any of the partners that we had. And that just didn't seem like a high growth venture business. So what we did was we said, okay, what are we good at? We've built up this technology and cross-chain interoperability experience. This is what we can do better than anyone in the world. This is what these large blockchain projects are relying on us to do. And with that, we realized that, okay, through this bear market, what is the one use case that's kind of came about that surfaced as a real good use case of crypto? Everyone thought it could be used for, video games, for supply chain, for quantum computing. There was even like space chain, right? There's all sorts of different random use cases applying blockchain to everything. But through the bear market, it was like Maker DAO was the only thing that really showed that it had users and it could withstand kind of all the tests and trials and tribulations of what blockchain could be used for. So with that in mind, we said, okay, well, why would Maker DAO only be available to Ethereum? If Ethereum's, I think it was like a 13 billion market cap at the time, and Bitcoin was 130 billion. It's like, why isn't DeFi or lending like Maker DAO offers and stablecoins like Maker DAO, what they offer, available to Bitcoin or to XRP or to any of these other X, Y, and Z projects that were in the top 20? And it's all just comes down to technology. Nobody had done cross-chain transactions that would enable this. And it was just sort of right in our wheelhouse to build exactly the solution and then give it to the world. A generalized DeFi platform that could offer loans and stable coins, provide Oracle and data infrastructure and everything else needed to then build like sort of the series of Web3 applications that could go on top. And at that time, as Maker DAO was taking off, it's like the BNB community, XRP, everyone's like, oh, like I really want DeFi, but I can't do anything. I can't stake my asset. I don't have smart contracts on my blockchain. I can't, get a dApp. I can't have Compound. I don't have access to anything. I don't even have a stable coin. So there was a huge opportunity that at the beginning of 2019 that we saw. And then by mid 2019, we launched kind of the initial conception of what Kava is, We were able to corral a lot of the leading validators and staking as a service businesses in the world to support the launch of our blockchain, which was really important. Like anybody can sort of say they're going to make a new Tendermint zone, but the security is 100% dependent on who are these partners that you can find, where are they distributed in the world, and how credible are they to support the security of your blockchain network. So we were very lucky to find the ones that we did. We got some of the largest from Cosmos, from Tezos, from kind of a lot that were venture backed, and we even got most of the top exchanges to run validator nodes to support Kava. And we ended up doing a Binance IEO, as you mentioned, in October. We had our mainnet launch of Kava, which was staking and governance using the Kava token. It was its own standalone blockchain that was launched in November. And then now, fast forward to today, we're about a month away from the live mainnet launch of the CDP, or the lending platform that allows people to finally put in some asset that exists on a different blockchain. The first one for us will be BNB, and use that as collateral to receive loans. So we're about a month away from having this all come to fruition, and finally the use case that we set out to accomplish will be offered to the world.
Cool. And could you walk us through a very concrete example of a random user using your platform? Because it can still seem a bit abstract, right? What's a
Right.
CDP? How do you go about getting a loan?
Right. So first, let's just say who's going to use this thing, right? What is the value of DeFi is also a big question here, because for Kava, the main use case is actually leveraged exposure to an asset. So if I'm a BNB holder and I let's say I hold 100 BNB, and BNB goes up, it's great. I have to sell some. If it goes down, I lost some money. That's not wonderful. But let's say I have a strong belief that BNB is going to go up. In many parts of the world, the US included, there's no margin trading or extra capital you can get to then buy more BNB to get more exposure to it. If I lived in Hong Kong, or if I lived in Singapore, sure, I could use Binance, I could use a bunch of different centralized exchanges, and they offer margin trading, which means that if I have 100 BNB worth of assets, I can open up a margin account and buy 100 more or 150 more to get leverage exposure. So when BNB goes up, I get 2x or 3x the gains. Unfortunately, if you live in South Korea or the United States, or you live in part of the world where you can't get a bank account, there's all sorts of issues for why you won't have access to like a margin trading account like this. And what Kava does is it allows anyone to, if they have crypto assets, they can deposit in the platform, receive a loan, and then effectively margin trade with it. So a BNB user would deposit their BNB, receive a loan in stablecoins, which we call USDX, and then they would use that USDX to buy more BNB. And then they wait for BNB to go up, and then they would sell off the extra BNB that they have, and they would make double or triple the gains that they would otherwise.
Cool. All right. It's a very clear example. You did mention Cosmos. Why did you choose to build on Cosmos and not Ethereum like Maker DAO, for example? And are there other differences between Kava and Maker DAO?
Oh, well, there's a lot of differences, but just at the very first piece I'll say is Maker DAO is a smart contract system. It lives on Ethereum. Kava is a standalone blockchain. And there's a lot of design considerations that we looked at and why we decided to do it this way. My team has expertise in doing cross-chain interoperability, and we don't need the Cosmos SDK to do this, but it definitely helps. What Cosmos's value proposition is if you make a blockchain and it has a similar consensus mechanism to another blockchain with, it's called IBC, the Inter-Blockchain Communication Protocol, you should be able to connect those two blockchains and transfer data between them very seamlessly, or transfer assets very seamlessly. Kava is a Cosmos SDK blockchain. Binance is a Cosmos SDK blockchain. OKChain is now a Cosmos SDK blockchain. The Cosmos Hub is its own blockchain. They all can connect and interoperate with the completion of IBC. And this is like the main value proposition of Cosmos, is that all these different blockchains can build on fairly similar systems design their own applications that will be unique to their blockchains, design their own node infrastructure and how they want to set up their security models of their blockchain, yet they can still all communicate and interoperate with very little development work. And that's very different as a paradigm to taking a blockchain like the Cosmos SDK blockchain and connecting it to Bitcoin or connecting it to XRP, which have very different consensus mechanisms. And those, when we're talking about that, that's where my team has to come in and think about how are we building custom bridges to move assets from one blockchain to another. And some are more easy than others, like XRP, because it's fast finality. It actually makes that work a lot easier for us. But something like BTC or even Ethereum, it can be quite difficult. BTC is particularly difficult because you can't build a bridge with because you can build a bridge, but it's very difficult due to the lack of multi-sig support that BTC has compared to pretty much every other blockchain. Even Bitcoin Cash has better multi-sig support with Schnorr signatures than Bitcoin has currently. So that's a big roadblock for the industry right now for just cross-chain and interoperability generally. But going back to your question, why we chose Cosmos was it also allowed us, rather than being dependent on the Ethereum security model, to design our own. And this was really important when we're dealing with people's money. People work really hard to earn their money. And as we've seen in kind of the Ethereum examples that you mentioned, there's a lot of issues that come with building anything on the Ethereum blockchain. And I think particularly what we've seen recently is high gas fees and slow block times have led to poorly performing oracles or not posting prices at all. And those data feeds or the price data that's being sent by the oracles is very critical for a system like Maker DAO, or even like if Kava lived on Ethereum, it'd be very critical, where people deposit collateral that can be liquidated if the price is at a certain threshold. And if the data doesn't accurately reflect what's happening in the market, you're putting people's funds at risk, and you're not letting the system be algorithmically manage itself appropriately to market conditions. It's going to be skewed and off. And that's really problematic. And then what we also saw just in the past March was that there's also just like a number of other issues, whether it's like DeForce hack. It was a bad month for DeFi on Ethereum, really. There was like the DeForce hack. There was Maker DAO, which was like an Oracle and congestion issue of the Ethereum network. Just block times were too slow, gas fees were too high. DeForce had just a whole, I don't know, there's so many things I could say about DeForce, but let's just say I don't think any of these issues are particularly one project's fault or not. It's also just building on Ethereum is very difficult. We did a lot of our early work making payment channels and cross-chain interoperability for like DAI and Ethereum, as I mentioned. And we had to build on Solidity, and it's a very tough environment to build for, because with an open machine that Ethereum provides, where you can make any kind of smart contract do anything, the types of testing you have to do to make sure that there's no possibilities of bugs or errors is ridiculously hard. Whereas by contrast, in Tendermint or on the Cosmos SDK where we're building, we can write a discrete module in Go. We can run very targeted tests at, does this module do what we expect it to do? And then we don't need to worry about a bunch of random developers injecting smart contracts into it and messing around with it like we would on Ethereum, because that exposes all these different types of attack vectors. So we're very, I'm very pleased that we made the design decision to not build on Ethereum. We did it for a number of these reasons, many more actually, but I didn't think the issues on Ethereum would play out as quickly as they have. So I'm even more pleased now. I thought it would take a year or two before a lot of these issues like congestion would be exposed on Ethereum, but it seems like it's becoming a critical focus because it's responsible for managing millions and millions of dollars.
All right. So you mentioned security, all the recent hacks, and we both agree that security is paramount when it comes to money. Were there any audits that were performed on the Kava code? How do you go about ensuring the maximum security for the user funds? You already touched a bit on this, but is there anything else you would like to add?
Yeah, so I mean, my engineers would be better suited to describe this than me. But how we think about security generally is we design, or the community designs some code that is slated to be voted into the mainnet of Kava, and it goes through kind of like the internal development, internal testing. We run a bunch of analysis from our internal team. And I'll give you an example of what we're doing now is leading up to our mainnet launch. We actually bring in a bunch of third parties to review that code. So we have Tendermint or Cosmos SDK developers from the Cosmos team themselves, since they're very familiar with these kinds of systems. We hire third party auditors and contractors to review the code. And it goes through like this internal phase, and then it goes to this third party peer review phase. And then there's like a formal audit phase that we have where you're actually working with Certic. Certic worked with us on our first mainnet launch, looked at it. They actually gave us a really nice review in their formal report. They said Kava is one of the best code bases we've ever seen for a DeFi project. I hope they say that again for this next launch. But we make sure that we work with a handful of auditors, not just one firm, but make sure many people put eyeballs on it, on this code, and make sure it works. And then once that happens, then it moves to the Kava governance group, where we have actors like Binance and OKX and a number of very high quality, very professional validator organizations, which are all very technically savvy. They look at the code and they vote if they want to adopt it into the mainnet. So we have, I don't know, at the end of the day, 50, 100 people review this code. And I think it's one of the most thorough review processes that any project I've seen does. But again, this is because this system is going to be designed for millions of dollars to be put into it and managed. And if one little thing goes wrong, it can be very catastrophic. So we have to be very careful.
Well, it's really impressive to hear about so many steps and people who go through the code. So very cool. You mentioned BNB in the example that you can put it in the system, right? Get a stable coin to get more BNB, and if you're right on going long, then you make more money when it goes up. I also read that you can stake BNB and get some returns per year. Is this something different? How does it work?
That's a good question. So we recently got a great partner. Framework Ventures purchased a lot of Kava tokens, and they had a lot of experience working with projects like Synthetics to modify their monetary policies. And when they came and sat down with us and said, "Hey, we really like Kava, but we think that you guys need to create a very strong incentive structure that's in protocol, that's on chain, that it'll bootstrap liquidity very quickly, so Kava can go from 0 to 60 very fast." And their suggestion was to create this inflationary schedule. So Kava already offers inflationary block rewards to the validators. They said, okay, add an extra 15% to that inflation schedule, but have this given to depositors of assets early that mint USDX. So depositors of collateral like BNB, if they mint USDX, they'll receive some incentive reward for doing so. And what that does is it helps us as a network go from having 0 USDX, where it's very hard to make a liquid market on exchange for, go up to millions of dollars of it very quickly, where then we can have a liquid market where it's functioning as it, and so people can easily get it, trade it for BNB, get in a position, get out of position. So that's the main goal here with this staking. I mean, we call it staking, but it's not like it's staking as a proof of stake system, but it's staking as users need to deposit their BNB in order to earn rewards. And what's really cool about how it's structured is that every week there's a finite amount of Kava. I think over 52 weeks, it's a total of something. I don't have the number off the top of my head, but I believe it's like 3,800,000 Kava, so just over $2 million. It is given ratably to BNB holders week by week. So each week, if you're, let's say there's 100,000 USDX made in the first week that this program goes live, if you made $50,000 of that, you would get half of the rewards for that period. and they're evenly given every week. So if you're one of the first participants, you're getting a lot, like a very huge return on your deposits for the first weeks. And as more BNB gets deposited, the rewards get smaller and smaller. But it's such a large kind of pot of incentives. It should be a very high staking reward regardless for any BNB holders, where the first few weeks, it's probably gonna be over 100% rate of return. Whereas, once it gets up to the 5 million, 10 million BNB deposit mark, then it's like, I think it's around like 9 or 10% staking rewards, which is still good. But it's like diminishing returns, right? So as more people participate, then the rewards get split over many more parties.
All right. And how many people have subscribed to this right now?
We have, I think, about 1,000 signed up. I haven't looked in the past week, but as of last week, we had around 1,000 people signed up to receive notifications that it's happening. So it's not available until the mainnet launches, but people are very excited and eager about this opportunity because, I mean, from my point of view, it's kind of free money. And if you participate, then you win. And if you don't participate, you might miss out, right? So it's structured very black and white, I think, and the industry is responding well. But I'm very excited to make this not just a private thing for Kava and our short email list of people who have found out about it early, but also when we open the floodgates to all the BNB users that exist within the Binance ecosystem. I think that's when it gets really interesting.
Pretty cool. So obviously you have a very tight relationship with Binance. You had your IEO over there. You have many incentives for BNB holders in the Kava platform. How are you still working with Binance? I see you're having many AMAs in language-specific groups, for example. Are
You've
they?
seen those.
I've seen those, yeah. Are you working with them in any other capacity? How are they helping you?
So they're the best partner we could possibly have hoped for, particularly for Kava, because our user base of our platform are crypto traders. If we were, like I said, if we're space chain, then maybe our users aren't crypto traders anymore. They're, I don't know, astronauts or whatever the blockchain is for. But for us, our main user base is crypto traders. And where do crypto traders live? Well, it's Binance. So Binance is easily the best partner both for communications and distribution and access that we could have really hoped for. So we're very fortunate in that way. And they've been very helpful post IEO in terms of markets and marketing and kind of anything that we have a need or ask for. They're very supportive. And like we have an internal account manager over there that can elevate things and connect us with the right teams internally. But the thing I'll maybe share that I'm most excited about is with this mainnet launch, we're really trying to gear up the Kava platform so that it can be integrated directly into wallets. So like one of the Binance supported wallets, Trust Wallet, is going to have DeFi lending and cross-chain transactions directly on it. We already have that on the testnet of Cosmos Station and a number of other wallets, but that's something. And then also, I'm hoping that in the near term, we can actually start building out things like very integrated experiences into something like the Binance Stacks, where someone, when they're purchasing, let's say BNB, they could just say, do I want to do this as a spot trade or do I want to do this as like a leverage trade? And they already have their assets in their wallet accounts or in their self-custody accounts. And it's just a simple click that says, okay, this is now a leverage trade. And maybe you slide 1x, 2x, 3x, whatever leverage you want, and then it automatically executes on the DEX. And then a similar experience in centralized exchanges that don't offer margin, I'm really excited about. And I think like Korea is a particularly great market for that kind of product, where previous to like DAI and USDX crypto-backed tokens, they didn't have any access to any fiat-based or like USD fiat-backed tokens because their regulations prohibited it. So then now that we have a crypto-backed thing, that actually fits within the guidelines of the regulations. So exchanges can list it there. And then also margin trading hasn't been available due to regulations in South Korea. But once something like Kava gets integrated into an exchange in South Korea, then people can kind of self-serve loans and self-serve to get access to margin trading for themselves. So I'm really excited about those integrations to come.
Cool. So you mentioned South Korea. You've been very active in Asia, right? And even though you come from the US, the regulations over there might be a bit tighter. So how do you approach this?
To say the
And
least.
yeah, what's your focus? What does your legal team say, and what's your plan regarding the global extension potentially?
So we've been very risk averse in how we've launched, and we've been very. I mean, in crypto, you always have to be somewhat risk, accepting. But for us, all of our validators and all of our token sales were done outside of the U.S. And all of our token sales were done to organizations that committed to running services, validators on the Kava blockchain. So it wasn't done as like a normal investment round. It was actually two users using the token for utility. So we're pretty confident in how we did our sale, that we're not going to run into securities laws and issues there. But with that said, we do look at the U.S. market as a huge market that we do plan to enter. But it just is more about finding like the right partners and choosing the right times. And I do think that's going to be slightly after we have our mainnet launch and we get about, I would say, maybe not directly after BNB, but as we get 2 to 3 different collateral types in our platform and a good amount of USDX minted, we can enter the US market pretty freely. At least that's our direction right now. But with that, even that said, the US market's huge. Most of DeFi, and I would say like 90% of DeFi, is actually happening in Asia. So for us as a company, Asia is our primary focus. It's China, it's South Korea, it's Singapore, Hong Kong, even to some extent like Australia and Japan. We don't have considered go to markets right now for Japan, but or go to market plan for Japan, but that is kind of in the near term once we feel like we've addressed the bulk of the Chinese market and the South Korean markets, because they're leaders in the space. And then we've also seen just Vietnam, both because their local currency is quite weak and their people prefer to hold dollars, but also just the crypto trading scene has grown really rapidly over there. And we've seen whether it's Binance, Huobi, OKX, like all the big exchanges are trying to see how can they position themselves as a leading exchange within Vietnam, just because there's that many new traders coming. And then India as well with their regulation. WazirX has been making a lot of noise recently, but I expect both for Vietnam and India to really contribute to the global blockchain ecosystem soon.
For sure. I was wondering, could you tell us a bit more about the use case for the Kava token? You did mention validators and governance, but is there any other use case, and what could drive the price up, or the demand at least?
Mm. So we launched with 100 million Kava tokens, and these tokens are used primarily first to secure the network. So in staking, it's critical that people lock their tokens and then verify all the transactions that are happening on the network as valid or invalid. And that's the primary job that validators do. So that's one use of the Kava token. The second use is more critical to the lending platform itself. It functions as a reserve currency, meaning that if for whatever reason the lending modules that we made become under collateralized, so it's issued more USDX debt than it has actual collateral from BNB deposits or BTC deposits, in that moment, the system creates more Kava, so inflates Kava, it mints new Kava, inflates all the existing holders because they did a bad job, and it sells that onto the market to new holders in exchange for USDX. So it takes this reserve currency, mints more of it, then purchases it off USDX off the market. So the USDX amount lowers, and then the existing collateral in the system eventually will reach a place where it's over collateralizing again, and the system will be back in balance and safe. So the Maker DAO system functions very similarly. And actually, if you look at the global markets, it's kind of the US, the Fed is kind of doing the same thing. They're printing a lot of dollars to repurchase debts and bonds right now, because it's all denominated in US dollar, even though they're foreign debt. So it functions very much like this, or as we can think about, like in the Greece bailout, the IMF comes in with the SDR, which is the global reserve currency. Kava is functioning just like that, but on a much smaller scale for the lending platform. Maybe I should probably say the most important piece, which didn't answer one of your questions, which is like, why Kava go up, right? With Kava, the main value proposition is that anyone who takes out a loan pays back the interest in Kava, and that Kava gets burned. So as the system issues more debt or issues more loans and gets repaid, then Kava's supply decreases. So a very simple like math equation I have in my head is as the Kava system's user base grows and debt grows, the value of Kava should also be going up because more of it will be burned. So if supply or if demand is constant, supply is decreasing. I hope that demand just forever grows. That's the nice thing. I think if the system is growing and more users are coming in, we'll have like a two hit with demand going up and supply decreasing all at the same time. So I think the fundamentals of Kava are quite strong. It's just about getting users to use the system.
Since you're telling us more about like loans, and like it seems to be a key point, right? Like more loans means that the Kava token price will go up, and I'm sure this is one of the main points many people are interested in because many people in crypto are interested in making some gains. So what are the advantages in taking a loan on the Kava platform compared to other existing platforms? Are the rates better? Is the security better? Is there anything else?
I think it really depends on where you are in the world, why you might use Kava. It'll be different for different people. As I mentioned, if you're in South Korea or the US, you don't have access to get a loan for crypto trades anyway. So this is kind of your default option. You do have this option of Maker DAO, which is a decentralized platform. You don't need to go through a KYC process to do it, but it only can use Ethereum and ERC20 collateral. For Kava, what we're setting out to do is to be a generalized platform where you can deposit any collateral. It's a top 50 liquid token in the foreseeable future. They'll all be accepted on Kava, and you can receive loans on that.
And will you need KYC on Kava? Will you need KYC?
No, it's just software running in the cloud. You can think of it as like you and I are on our computers and you're writing, let's say we're 12-year-olds writing an essay for a teacher. We type letters on our keyboard and the software makes letters on our screen, and then we print it out and give it to our teacher as the book report or whatever it might be. And similar with Kava, unlike traditional financial markets, when you deposit collateral, it's still you just interacting with software, just like Microsoft Word. But instead of pressing a key on your keyboard to make it show a letter, you're depositing collateral, and then you press another button and say, give me a loan. And the software makes a new token for you right away based on your collateral. There's no counterparty. There's no supplier of the capital. There's no other side like you would have in a peer-to-peer lending market. This is direct one user and the software interacting back and forth, which is also why there's no requirements for something like KYC. There's no regulatory oversight because it's really just a user interacting with software by themselves. So it's pretty straightforward, but it's very new that the world has never seen before.
Yeah, makes sense. So do you have any, star players on your team? What's the experience you guys have? How did you
Obviously
build this?
No, I can't take any of the credit. We have a fantastic engineering team, and our core team that we started off with, well, they don't have the most illustrious career of like Google and Facebook. They're incredibly sharp guys. Two of them were professional poker players before, very analytical. One was an entrepreneur before joining. He was the CEO of his own company before we partnered together here. And then we have a number of people on our team that we have like PhD cryptographers and masters of physics, very, very math and brainy people that, I'm the complete opposite. I'm the guy who runs around and tries to find the best partnerships and make sure that where the Kava ship is going in the right direction. But these guys are really solving all the hard problems that just, you need the overclocking brain power to really dive into, because this isn't all the things that Kava is that Kava is doing today, all the new technology that we're shipping, like the bridge that we just made that moves assets between Kava and the Binance chain. None of it was ever done before. This isn't like we just sort of copy pasted code and we're just applying it to our new problem. This is like you have to build these systems from the ground up, from first principles, to make sure that the use case that you're going after is adequately solved for. And there's so many places that errors can occur, which is why I'm so impressed by projects like DeFi, like Compound, or even Maker DAO. Like the hurdles that you have to go over to create a system like this are huge, and people have no idea the difficulties that exist here. It's not like if we were building a mobile app, it'd be super easy. We could ship a mobile app all day long. If we make an, if there's an issue in the mobile app, you go, uh-oh, and then just, push a new update and everyone gets the new app and things are fine. With a blockchain, it's more like hardware. If something goes wrong, it's on thousands of computers everywhere, and they all have to manually synchronize together, not just one person communicating with one server. They all have to synchronize together and agree on the way to go forward. So if you have a mission critical error, it can be like well, it's many of the reasons why blockchains have forked and communities have forked in the past is for reasons like this, when kind of things go wrong. So anyway, I would just say, like, it really does take an incredible team to build a platform, to build a blockchain, to build any of these systems like this. And I would also say it takes a very diverse team. So you both need the smart kind of technical people, but you also need the people who can then take that product and move it into the market. And I think that's maybe where I'm a little bit better at, is how do you build a nice liquid market? I'm very happy that Kava as a project is now trading, a few $1 million a day. It's a very liquid market that's doing better than many stocks at this point. So I'm pretty pleased about that. We could have just as easily, if we didn't do a good job on the market side of things, had the Kava token, go from 100 million the first day that we were trading on Binance to then just like a few thousand a day, and then nobody could trade it, and it would, regardless of what the platform is doing, if there's not a liquid market for it, it kind of by default becomes a shitcoin. So for us, we've always been liquidity maximalists, where we want to have very liquid markets for our assets, both Kava and then USDX launching this month. Like, it's very important for us to have millions of dollars flowing daily between these, so people can enter and exit positions and people can get access to it without a lot of slippage. And I think that's very much in contrast of what we see with other DeFi platforms. So if you look at even DAI has very poor liquidity, and Maker has very poor liquidity. It's not an asset that you trade. It's an asset that you might buy and hold, but it's not. It's very hard to move in and out of DAI in large quantities still, just because there's not a big centralized liquidity pool for you to use to go between DAI and BTC or other assets. And I think this is where Kava will step in and do a really good job, because we both have the technical team, but then also a very nice diverse team on top of that can handle things like markets.
Right. That makes total sense. And I think the names from Google, Amazon, Facebook, they're good for the sale, but are they really good to get things done? I'm not too sure. I would maybe rather want, people who have real experience and like with the real achievements. Poker players, it's like survival of the fittest, right? Either you get shit done and you win, or you just stop being a poker player. So
Right. There's only one winner at the end of the day, and if you can do that professionally, I think it speaks wonders, because someone's going to walk away with less money and the other person's going to walk away with more. It's a zero sum game, and I think especially for engineering work, it's really helpful to have people who think through problems like that, where they're like, give me the scope of the problem and I will maximize everything that we do within that scope to come out as the winner. And I think that attitude is really helpful, both from engineering and also just as an entrepreneur. I think it's very helpful when you have people who are just like, I'm going to win. I have to win. I need to win. And they work at, late hours in the night at all costs to get that outcome that they're after.
yeah, for sure. Cool. So also very cool on the liquid stuff. Uh, I think it's great. Obviously, you already started on Binance, but you're also on many other exchanges. I wanted to touch a bit on the Chainlink partnership, because you did mention at some point that it is very key to have a price feed, because it's a key component, right? To know if it's you need to sell the assets that were used as a collateral or not. And so, what did you use before the Chainlink partnership? And don't you think Chainlink is decentralized, right? But are you using just Chainlink as decentralized oracles? There are other decentralized oracles in the market. Chainlink is actually a partner with like maybe hundreds of companies. I'm not too sure, but certainly a
Yeah.
lot of companies. And so, if there was like a bug in the Chainlink code, maybe that could be the attacker could have a lot of power on all the
Mm,
applications that use Chainlink. So I
mm.
was wondering if you maybe had in mind like a weighted um, system with different decentralized oracle providers.
It's a good question. Oracles are very, very important to any DeFi system. Um, I think what maybe wasn't 100% obvious from our announcement with Chainlink was it is actually a bit different than their standard partnership. And it is because we have our own blockchain with its own security. And how we've designed the oracles that will operate on Kava is that they're all actually nodes of Chainlink, but they're not operating on Ethereum, posting prices on Ethereum. They're running software specifically for the Kava blockchain. So it's different software. It uses all the same sort of bells and whistles that Chainlink has, that people know as industry leading technology. So TLS signatures to verify that the data is actually coming from where it's supposed to be. They have they only use paid and premium APIs, so the data quality of where things are coming from is very good. They are decentralized, as you said, and they have many other features that we obviously we kind of like looked at the landscape and said, okay, Chainlink is kind of leading the way because of all these points. But for Kava, we still had very specific needs. And one of the things we were very worried about was, well, if we had Chainlink oracles running on Ethereum posting prices to Kava, well, we still run into the same congestion issues of the Ethereum network. There still can be like slow posting of prices. Sometimes they might not post prices at all because gas fees are high. All sorts of things can happen. So instead, we have them run new software that's just for Kava, where our block times are really fast. They can post new prices every few seconds, all the time. There's no gas fees that they need to pay. So we're not going to run into those issues. And we can then, as the very first Cosmos based implementation of Chainlink oracles, we can then be the hub to all the other Cosmos ecosystem projects, Binance Chain, OKEX, every other application that's built on that Cosmos SDK. And through IBC, they can connect to Kava and get this Oracle data. It's all powered by Chainlink, but now it's kind of like Kava is the hub to all these other blockchains within the space to get that. And we needed it for our own lending platform. We needed to have accurate price data. So it made sense to choose the best Oracle solution that's available rather than building it ourselves. But it also made sense to make these tweaks to really offer something that's even better than what's available on Ethereum and other places. And kind of you'll see in this next week, we're actually going to have several announcements of these top Chainlink oracles are now moving and running nodes on the Kava blockchain. And we're going to talk about each one of the, pretty much one a day for the next week or so. We'll be kind of showcasing who they are, how they run their operations, and what it means for Kava going forward. I think it's going to be a really exciting time where Kava, as the DeFi platform for Cosmos, can not just offer loans and stable coins, but any other DeFi application is going to need data as well. So it makes sense for us to be a hub to data for everything else. So that's kind of like the high level of the Chainlink partnership. People thought it was just sort of like, oh, Chainlink nodes are going to post prices to Kava. It's actually much deeper than that. And but we need to do a better job of making that clear because it's going to be really big in the months to come.
Yeah, very impressive for sure. It sounds like the gateway to many more integrations with big key partners in the space. So I'm really looking forward to that. I would like to touch a bit on the financial side. How much did you raise? Did you convert the money to a stable coin? Did you keep some in ETH and lost some money because ETH went down mostly? How much do you burn? How are you looking like financially?
Yeah. So what I will say is we did raise a seed round in 2018 to 19, beginning of 2019. We raised a small equity round with partners like Ripple and a number of VCs. And some of that money came in ETH. And when the crypto markets hit some bubbles, we did take a hit there, and that sucks. And we learned very quickly. Thankfully, it wasn't a huge amount of money, but when you're a startup and you lose $100,000, it's like, oh, that's not good. That's an engineer, right? We learned from that, and kind of when we went into June, and all of a sudden we were doing much larger raises. $5 million was kind of like the first validator sale, and then another 3 million from the Binance IEO, and so on. We took a different approach, which was much more like a corporate treasury management approach. And how we think about that is we don't just transfer it to stable coins, but what we do is we hold 18 to 24 months of runway in different bank accounts in US dollar. So that's just like the safe money. We need to make sure that at all times we easily have enough money to continue growing rapidly for 24 months. Don't need to think about that. We just park the cash, and that goes into money market accounts in the banks and earns, some small percent, let's say on the best case, with reverse repos and other things like 2.5%. So that's one part of the money. That's like the liquid money. And then everything else, you need to put that money to work if you're being wise with your corporate treasury management strategy. And for us, it didn't make sense to hold just a bunch of crypto. We're already really highly correlated with all of our Kava assets. To hold more crypto, then as we saw in 2018, how many projects just completely got destroyed when Ethereum went from, what was it, like a 1200 to down to 200. If all your money's in ETH, it's really bad for you. If you're correlated to ETH, it's still really bad for you. So what we did was we found a bunch of market neutral hedge funds and other long-term investment vehicles that we could stick the money in, that we felt were relatively safe, that would provide better than the 2% return we could get at a bank account. And those have longer unlocking windows. So while we might earn more, we can't access the funds for a year, or it has a quarterly redemption period. And we diversified kind of that like an investment manager would, to make sure that our risk was appropriately spread out. So we have our liquid assets that are used for expenses. We do have some crypto for market making as well. We have to help facilitate all this liquidity that's happening in the markets. And then we have sort of long-term investment where we parked a lot of the cash that we know we're just not going to touch for several years. Anyway, that's roughly how we think about it.
Cool. Thank you for the answer. It sounds very responsible in regards to, I'm sure, what 90% of the startups in crypto are doing. What are the current issues you're facing? What was difficult in the crypto space? And do you have plans for the near future? You talked about the mainnets.
Yeah, there's so much that's difficult. I think liquidity and finding listing partners was actually way easier than I thought it was. Launching the mainnet was difficult back in November. I think this launch in May will be a lot of work. Like, our guys are already losing a lot of sleep trying to lead up to this and get everything done, because it's an engineering lift, it's a development lift. But then you have to tell everyone about it. So there's a marketing component, there's both security, then you have to get all the validator partners, which are like 100 different companies, to all vote on different issues, upgrade their nodes at the right time. It's a big orchestra that you have to facilitate and make sure everyone's going along to the same tune. So I imagine the next month is kind of going to be as hectic as when we did our IEO. But hopefully after that, it'll be live, people will be depositing BNB, we'll have USDX, and then things should be a lot easier, because then the challenge is just getting USDX listed into different exchanges and helping facilitate liquidity there. So I kind of imagine this month being a really hard month with a lot of work, a lot of things going on, and then a bit more relaxed cadence. We'll still be working hard, but it just won't be like many nights of sleepless nights. And then we plan just to add assets from there. So we'll have BNB, then get the next assets, and the community of Kava will need to decide, do we add other BEP2 assets, since we've already made a bridge to Binance Chain? Will it be BTCB and XRPB as assets? There's over, I think last time I checked, $80 million worth of BTCB there. we could make that into a supported deposit collateral for Kava, and people could get exposure to BTC right away. Or would the community prefer to have a bridge to XRP or other assets? And that will follow the lead of the community for what they want next following this launch with BNB. But it'll be a rinse and repeat with each new asset. Give them an incentive to deposit their assets, receive additional staking rewards, get more USDX minted, add a new asset, do the same thing over and over again until Kava is this huge, massive behemoth.
Cool stuff. And what, as a trader, what advantages would I have to trade against USDX instead of trading against USDT, for example, which I'm used to?
I think there's going to be an education issue, but if you look at USDT is impossible to really beat the liquidity of USDT. It's the market leader by far. But what something like USDX has to offer is that unlike USDT, if you hold USDX, you automatically get paid the interest rate, the savings rate, every block on Kava just by holding it in your wallet. DAI, you have to lock it up into a smart contract to earn it. On Kava, it's paid out block by block. So if you just hold USDX in your account, you start earning the savings rate without doing anything. So as a trader, it should be a really, really nice hedging instrument because you'll be making a return the moment you swap into USD. It's not going to be your crypto gains, but it's still going to be a really nice 5% plus savings rate. So that's one. The second thing is because Kava is made on its own blockchain and on the Cosmos SDK, it has much higher throughput and finality of each block, where transactions are confirmed in 5 to 7 seconds. It becomes a really nice asset for stablecoins to do arbitrage between different exchanges. So once it does get listed on 2, 3, 4 exchanges, it moves a lot faster than Tether, which is based on Ethereum or other stablecoin options like USDC, which take multiple minutes to transfer between different exchanges. They can use USDX and have a really nice stablecoin to ARB. So I think that's also going to see a lot of use from high frequency traders.
Yeah, makes sense for sure. And I believe you also talked about potentially making USDX used into non-crypto applications, right? Like maybe you could buy stock with USDX. How would that work?
Yeah. So my vision for USDX is that it can be placed. I think it's the ideal product for a modern investor, which is using a fintech app like Robinhood or Wealthfront, and maybe they're trading stocks on Cash App, whatever it is. They deposit cash and they still earn a really crappy percentage rate like you would in a checking account, but then they might be trading it into Apple stock or something else. When it's not in stock, they're missing out on a lot of gains. And some might put it into bonds, which have a long lockup, or they might put into T-bills, which offers 1 or 2%. Although that's going to go down quite a lot in the next few months, I think, given the money printer go burr that's happening. I think interest rates are going to be dropping pretty heavily. And I think with USDX, when that can be available to any person with a mobile phone, it's like, would you prefer to have your money in a stablecoin asset that pays you 5 to 10% annual interest, or would you prefer to have it in a checking account where you're barely getting 0.1? I think it's a no-brainer, and it just is a matter of getting these integrations into these different partners. And I've actually had a lot of preliminary discussions with some smaller banks and fintech apps, and it seems to be a pretty clear, cut and dry case that yes, their users will love it. We just have to make sure that the technical risks are all addressed because a lot of these companies have never really touched crypto before.
Right. And so I wanted to ask you maybe more of a global question. Crypto is maturing, right? It is becoming less and less wild, as fun as it was. Maybe it's for the
I wonder if
best.
people ever say crypto becomes more immature over time.
So, I mean, big banks are coming in. What do you think about the whole crypto space as a whole? What do you think will happen in 5, 10 years? And where do you see Kava in that ecosystem?
Ooh, 5 or 10 years. I'm probably not.
Or maybe
Most people
three
don't like my
years.
point
Maybe
of view.
3 years.
Most people don't like my point of view because I'm kind of a global macro bear. But my view on the world right now is that the dollar has a very strong position, as the global reserve currency or whatever most of the debt is denominated in. And there's two outcomes that can happen. Either the dollar explodes in value compared to other currencies, or it drops as the Fed just has to print lots of money. I think it's actually going to explode in value because the other central banks will print a lot more dollars along with it, or yen or euros or whatever, to try to keep parity. But I ultimately think that we're going to be in like a liquidity squeeze for dollars, so dollars will be really strong. And I think through all the issues that COVID and kind of the economic fallout that will probably face in the next 6 months, as that happens, I think more and more people, as they see the money printer go burr, they'll start leaning towards things like Bitcoin and gold a lot more. So my point of view is that we're going to have a lot of volatility in the stock market. Dollars are going to be probably quite strong as things get really shaky. And I think we're in a weird calm before the storm period right now, specifically, where we had a big spike. Things seem to be recovering, but when you look at other periods of time in the past, like after 2008 and back in the Great Depression, there was always sort of this like very nice dead cat bounce, or like a recovery phase that happened for a few months after the initial spike, and then the economy took a big hit. And I think we're going to experience something like that. And as that happens, I think more and more people are going to move into assets like gold. But now BTC is becoming a really nice option as well. So we have big endowments and larger investment portfolios picking up 1% of their total assets in Bitcoin and other things. And I think that's really going to drive, along with the halving, with reduced supply, a much stronger BTC price. So I'm pretty bullish BTC. I'm pretty bullish gold. I'm bullish dollars, and kind of not wanting to trade much else at this point. But I don't have any long-term view of, will BTC become the global currency in the future? It's like, I don't know. Maybe, maybe not. Maybe 10 years out, it's something like BTC with Lightning, or who knows? It could be Tron for all I know. I won't speculate on it. Right? It's good luck. But I think that what I am certain of is that there are uncertain times ahead, and in those uncertain times, over the next 12 months, people prefer assets they can rely on. US dollar is something that they can rely on. Gold is something that it's the only money that is not debt-based money. It actually has intrinsic value. And then Bitcoin seems to be a really nice option to gold. And as Raoul Pal of Macro Investor says, Bitcoin is like a call option on the financial system. So if things really explode, Bitcoin is there to step in, and it's really well positioned for that. So I'm kind of a bull across the board for those.
Cool. Thank you for sharing your thoughts. And I agree with you. It's very hard to predict and to know where things will go in like 5 years. Is there anything else you would like to say about Kava? Something maybe we didn't touch on?
Yeah, Kava's the best.
All right. There you go. There you go.
No, please follow us on Twitter. Our Twitter handle is @Kava_labs. And all the news and announcements will be there. And if you haven't signed up for the BNB staking campaign, kava.io/registration, you'll be the first to receive notifications of when it goes live. Like I said, I think it's free money. The protocol is offering these incentive rewards. They're very strong incentives, so I'm going to do it. I hope everyone else does it. I highly encourage people to do that.
Yeah, well, when I was researching for Kava more in depth for this video, I took a look at the numbers, and I also registered myself. So I also do encourage people to do that. Sounds very interesting. And as you said, there might be big returns in the first few weeks. All right.
Yeah.
Thank you, Brian. Thanks a lot for coming in.
Yeah, thank you, Alex. Thanks for having me.
Cool. Bye.
Bye.